start streaming. Okay. All right. Good morning. Today is July 16th, and we were just done with chapter 16 and about ratio analysis. I just want to say to Mr. Jimenez and to Mr. What's the other name? Other gentleman? Mr. Walsh. Yeah, I want to tell both of you that you need to start working on your project. And if you need assistance, please don't hesitate to call me or send me an email. And as I said also previously, you need to record your project on a video and email me that video. It's a must. Yeah. Please read the details in the syllabus. All right. Now we're going to move to chapter 17 about managerial accounting. All right. Okay. Brother Bailey, what's the difference between managerial accounting and financial accounting?
Financial accounting is just dealing with the numbers, and all that. Managerial is dealing with everything else, such as like, I guess.
What do you mean numbers? Well, this one also deals with numbers, managerial accounting.
Yeah, but it deals with more than just numbers, is what I want to say. In financial accounting, dealing with like, I guess, revenues, expenses, like all of like the financial statements, basically.
Uh-huh.
And the managerial is dealing with expanding beyond that, like dealing with like, I know inventory is one of the financial statements, but you know what I'm saying, like it's hard to explain, but it's more than just money involved with managerial.
Financial accounting has to do with preparing the financial statement.
Yeah.
Everything we have learned so far, from chapter 1 in accounting 1 until last week, doing the accounting cycle, all the accounting cycle until you end up with the financial statements, the income statement, the owner's equity, balance sheet, and the statement of cash flows. Managerial accounting is beyond, a little bit beyond that, whereby it has to do with the future. It's future oriented, and it is for internal purposes only. Okay, that means it's for management use only. All right, so this and also it's also for future, internally focused and for future use. Yeah. Okay. Lots of reports that are done in managerial accounting, like coming up with a product cost. Okay, that's a managerial accounting. Making a budget is a managerial accounting. Yeah. All right. Let's look at this definition of managerial accounting. I'm not asking you to memorize it. All right. The role of managerial accounting is to enable managers and people throughout an organization to make informed decisions, be more effective in their jobs. See, when we say making informed decisions, that they have based on evidence. Okay, based on evidence. They do analyze the financial statements and they make some prediction. They do the evaluation that we did last week, all right, in chapter 16. And then they make decisions, that informed decisions, all right? And to improve the organization performance, that's the major objective. Yeah. Look at this definition. According to the Institute of Management Accountants, managerial accounting is a profession that involves partnering in management decisions making devising planning and performance management systems, and providing expertise in financial reporting and control to assist management in the formulation and implementation of an organization strategy. You can see this is a planning or decision-making process, okay, helping in budgeting, helping in decision-making process. All right. Well, you can read that. I'm not going to ask you what the definition is on this one, but I will come to the more important things as we come along. Okay. Now we're going to look at managerial accounting from the point of view of costs measurement. Okay, from the point of view, remember earlier we said that trying to find out the cost product is a managerial accounting function. You will always see a interlap between cost accounting and managerial accounting. Yeah. When we had a concentration accounting, we used to teach both classes, cost accounting and managerial accounting. All right. Now, how do you measure costs in these different kinds of organization? In service organization, costs can be traced to a specific service, such as preparation of the tax returns in accounting firm. For example, if the 1040 for an individual, or 1040 easy also for an individual, it depends, or if it's for a business. So if you prepare a tax form for a business as opposed to that's how. For an individual it's easy, so they may charge service per that. For an organization it's a little bit complicated, they have different price for preparing it. Yeah. So that's an example. Or a doctor, for example, how do they measure what they charge? They have their, for example, the checkup. If you're going just to do an annual checkup, or they do tests and these things. Yeah. Each area, each specific area has its own charge. All right. In a retail organization, how do they come up with the costs? In a retail organization, how do they measure a cost? Costs can be traced to a department such as the produce department in a grocery store. What kind of well, in the place where you work, how many sub areas you have there? You have the gas.
We got we got like you said, we got a little produce department, our fresh eats department. We got the candy and drinks.
You have accessories.
Oh yeah, we do.
You have food.
Yeah.
You have non-taxables. I remember that.
Yeah.
Do you still have those things?
Mm-hmm.
You have the gasoline, the gas. Yeah. So these are different areas. Each has its own.
Yeah, I run reports on them every day, like waste and all that, like for waste and costs, like retail and bad merchandise and all that stuff. So I run reports on like each section every day when I do the books.
In manufacturing organizations, costs can be traced to a product, such as the candy produced by a candy company. Well, if, for example, the Tyler pipe, how do they measure the cost? Probably by the kind of pipe and the length, maybe.
And the materials made out of.
Yeah. So there are two major categories of costs. There are direct costs and indirect costs. Okay, there are direct costs that are directly traced to the product. Directly traced to are costs that cannot be measured. Costs that can be measured conveniently and economically by tracing them to a cost object. What is a cost object? Material, for example. Okay, the product itself as a like this textbook, for example, that's an object. The employee is an object. The whole organization is an object. Yeah. All right. Direct labor is an object. Yeah. And also you have indirect costs. Those costs that cannot be measured conveniently and economically by tracing them to the product. They are included in the cost of product or service by using formulas. Those are not traced, they are allocated. All right, they are not traced. Tracing is easily, you can just look at, for example, direct material. You know what the direct material cost is. You know what the direct labor cost is. Yeah. But the indirect cost, another name for them is overhead. That's why they're saying using formula. For example, the utility bill. How can you trace that to the product? And there is certain ways to do that. Yeah, there are certain formulas. Okay. Or inspection, for example. How can you relate that to the product? Okay. So, for financial reporting, okay, when you do your income statement and balance sheet, costs can be period cost or product cost or product unit cost or service unit cost for financial purposes. Period costs, those are non-inventoriable costs that do not have inventory. Okay, such as they are recognized as operating expenses on the income statement. Now, remember in the income statement, you have net sales minus cost of goods sold, give you gross profit or margin, minus operating expenses. And there are two categories of operating expenses, if you remember. General and administrative, and sales. Yeah. Okay. Selling expenses. Yeah. General, administrative, and selling expenses. Okay. Brother, then you have to redo these. I'm surprised your answers are some of them as well, but redo those, please. I already have grades, but I want you to redo them. Brother Grimm, you too. Because it looks like everybody else, but you guys come up with a different answer, different way, okay? I already, like I said, I already gave you grades on those, yeah. But I want you to redo it. Go over it one more time. Yeah, and be a little bit more accurate, yeah. Okay. All right. Product costs, those are inventoriable costs. That means they have inventory that you can touch and see. It includes direct material, direct labor, and also some indirect costs, some overhead. Now remember, overhead and indirect, they are synonymous, all right? They are recognized on the income statement as cost of goods sold and on the balance sheet as inventory. Remember, we are under financial reporting. Okay, that means they are included in the income statement and the balance sheet. In the balance sheet as inventory, and the income statement as cost of goods sold. Even inventory included in cost of goods sold. Remember, beginning inventory plus purchases available for sale minus ending inventory equal cost of goods sold. You remember that? Okay. And then you have product unit cost. Once you find the overall cost divided by how many units produced. All right. And then service unit cost, the cost to perform, like the cost to make a federal income tax for an individual, or the cost to inspect a car, for example. All right.
Oh, washing cost.
Yes. Yes. All right. The three elements of product or service cost are. Those are, remember them like your name, guys. The product costs. Okay, the three elements of product cost or service cost: direct material, direct labor, and overhead. Direct material, direct labor. So, what does it take to make this disc? It takes material, correct? You need the wood, you need this. Basically, you need wood. Number, in a minute. Nails and it takes that too. Yes, sir. And also takes labor. You need some people to put it together. That's labor. And where you come in, what you're saying is the overhead cost. The glue, maybe some nails those are indirect costs. Why are you looking at me like that?
No, I'm just
What's in your mind?
Oh no,
Go ahead, say.
No, nothing on mine now.
All right, overhead costs. So we know what the direct material, and we know what those are. You can easily measure direct material, direct labor. You know exactly what the cost of the wood is, the cost of this base here, and you know what labor cost is. Also, maybe by an hour or through salary, maybe. Okay. The overhead. Those are indirect production costs, the costs that cannot be practically or conveniently measured. Okay, like we said earlier, if you take the insurance, for example, okay, the insurance is for the whole factory, correct? How can you make it as part of the unit cost, product cost? Yeah. There are ways that we're going to learn, all right? And so the overhead are made of two, overhead or indirect, there are two of them. They're indirect material and indirect labor. Indirect material and indirect labor. What kind of labor that can be allocated to the product? What kind of labor that can be allocated to the product? See, the inspection, maintenance, engineering design, supervision, and material handling, those are indirect labor. And you have also indirect materials, such as the cost of nails, as what Reverend Darian said, nails, rivets, lubricants, and small tools. Those are indirect material. Okay, that are part. See, it's not, this product does not come by itself. There are everything happened or everything occurred to make this product must be counted. Otherwise, you won't have a correct cost per unit. See, that's the major headache, the overhead. How to allocate? There is a lot of overhead cost. It's a big portion. But how can you allocate it to the product? Material, direct material, direct labor are easy. You know, those are written in the receipt. You know what the costs are. But once you receive insurance, you do inspection, you do cleaning, you do design, you do setup for the machines. Those takes money. So that's indirect. Sorry, indirect cost. You have to to allocate. There's a difference between tracing and allocating. The tracing is easy. You just take it from the maybe bill of lading, and then you say, oh, here's the cost. But once you get something in, like the utilities, the inspection, how do you count these as part of the product? Okay, and you have to. It's a must. Yeah. Otherwise, you have a untrue cost, and that's going to affect your financial reporting. They're going to affect your income statement, balance sheet, especially when it comes to inventory for the balance sheet. All right. So under overhead, what's the other name of overhead? Indirect. Yeah, and you have indirect material and indirect labor. Okay. By the way, you watched the TV yesterday for the World Cup?
France. France won.
I did not, but I saw in the news.
What did you want to win?
Croatia. I like the other one to win.
Croatia?
Yeah. It's a Muslim country, I think. That's why I like it. I don't want to mention it. All right. Also, for financial reporting, you have two major categories. Okay, all of those three production costs, which are direct material, direct labor, and overhead. Those three fall into two major categories. You have prime costs and conversion costs. Prime and conversion. Prime is your direct material and direct labor. Prime costs are your direct material and direct labor. Conversion are your labor and overhead. Okay? Your labor and overhead. Conversion, the cost of converting or processing direct materials into finished goods, they are the sum of direct labor and overhead. Okay? The prime are material and labor. Okay? Direct material, direct labor. Okay. Cost behavior. And I'm going to spend, let me be back in a minute. Let me get me some. Okay, cost behavior. Does that mean that the costs are behaving badly? Does that mean that the costs are behaving badly or they're behaving okay?
Badly.
Now, cost behavior, how the cost is measured in relation to production. How does the cost change in relation to production? Yeah.
So like supply and demand.
I would say supply and demand, yeah, because this is a different category, different issue. Yeah. Variable costs that change in direct proportion to a change in product output. And in this regard, and I'm going to say the cost differs as a total. Variable costs differ as a total, but is constant per unit. Okay, and let me tell you what does that mean. When we say,
so it's different every unit.
now it's constant per unit, but different. If you produce 20 units, 40 units, 50 units, the total is different, but per unit is constant, the same. And let me get my chalk one more time. Oh, here's one. Let's say you produce bikes. Is that how you write bicycle?
Yeah.
B-I-C-Y-C-L-E? Okay. If you produce, let's say it costs you $30 to make a bicycle, one bicycle. $30. So if you produce 20 bikes, 30 bikes, or 40 bike. The bikes cost 30, correct? Per bike. So if you produce 20,
60.
you get 60,
I mean 60.
total cost of 60.
600
30,
by phone.
90. 40, no, 900, sorry.
Yeah, 900.
20 times 600.
600. 1200.
And 1200. See, it's changing as a total. That's the variable. As a total. But still per unit is $30 a bike. Okay? So when it says variable cost, variable as a total and constant per unit. Okay? When we say fixed, okay, that's fixed as a total, but it varies on a per unit. Okay, fixed. This is variable cost.
That's a cheap bike.
All right? Fixed cost. Give me an example. What is a fixed cost? First of all, what is a fixed cost?
The cost remains constant with it. Alright, let's say for example, Arizona tea.
Huh?
Like for example, Arizona tea. They stay 99 cents for how long? What?
Arizona tea is a variable cost.
Man, hey.
Yes, it is.
They kept it real with the 99 cents for about 10, 15 years. I don't know.
It's a variable cost. And tell you what's fixed cost. Regardless of how many units you produce, you still have to pay the cost. Whether you produce 20 units, 1,000 units, 100, you still have to pay. Give me an example of those. A cost that you have to pay regardless of how many units you produce. Reverend Darian, give me an example of those. How about insurance?
Oh,
On the
yeah,
place.
that's why I wanted to say that, but I didn't want to say that. I didn't want to say that. I thought it was wrong.
How about rent? If you are renting the place to build the factory, to manufacture inside, regardless of how many units produce, you still have to pay the rent. So it is a constant as a total, but if you want to divide it by the units you produce, then it's different. You will get a different unit cost. Yeah. So the supervisor's salary, the manager's salary, okay, as a fixed cost. The managers who just come and look on the store.
Cause they pay hourly no more. They
Yes.
get their salary, so they get paid what they get paid no matter how many hours they work.
Yes. Now, no matter how many units. Now, get used into the area of manufacturing now, all right? Get used to manufacturing. That's what we talk about. Manufacturing. Okay. Yeah. So, give me 2 examples of manufacturing in Tyler area. Tyler Pipes. That's one. They make pipes, correct? Yeah. And what else?
Can you say where?
I've been seeing stuff. Tyler got a lot of businesses. Everything.
How about the company that makes air conditioning? What was the name of it?
Train.
Trane.
Train.
Yep. That's a manufacturing company.
It sure is. It'll become my job all the time.
Even though have a feeling they just collect the units, don't they?
Nah,
They assemble them.
They assemble them, yeah.
Couldn't agree, man.
But they don't make the pieces themselves, do they?
I believe so. That's a big production.
No,
They have the
I don't
units and
think
they put it together.
Oh, they just put it
Yeah.
together. Yeah, that
Yeah.
was the actual pieces. Yeah.
Couldn't Green Mountain, couldn't
But still
Green Mountain
manufacturing,
Energy?
yeah. They produce units, full units of.
What about Green Mountain Energy? That's dealing with electricity.
General Electric,
Green Mountain, what up?
the water thing.
No, electricity.
No, that.
I don't mess with them.
I don't
They
think
change
that's a
this one
manufacturing.
payment, and then you go back and pay it, it'll be like
That's a service provider.
From a whole nother bill.
Talk about something they manufacture. It's manufactured. The GM, General Motor, Nissan, Toyota, the companies that make the, give me a major manufacturer in the USA. Other than these, other than the,
You just said General Motors.
but there is one, what's the name of the company that makes the engines for airplane engines?
Oh, I don't know.
General McDonald or Douglas, something like that. Yeah, go and take a look and see. I think you use them, General McDonald or Douglas, something like that. Yeah. They make engines. Those are the best engine in the world. Nobody else makes them. You know, well, Russia make their own. Okay, so.
I thought where George Lopez worked, you know, George Lopez show, y'all seen it? He working at airplane factory selling airplane parts and all that.
You know, Brazil sells some of those parts to the USA.
I'm not surprised.
Mm-hmm. Okay, so fixed cost, a cost that remains constant within a defined range of activity or time period. Examples of variable cost: the material is a variable cost, the labor is a variable cost. Okay, the in service organizations, are you all listening to me or you still?
No,
I'm
I'm
still searching it.
Okay, in service organizations, for an airline, the cost of peanuts and beverages is a variable cost. The ones that they give you on the plane, while the depreciation on the planes and the salaries and benefits of the crew are fixed. On a service organization, yeah. How about a school? Yeah, for example, you guys, give me a variable cost and fixed cost. My salary is a fixed cost as a professor.
You got a salary, yeah.
Regardless of how many people in the classroom, whether I have 20, 10, 15, I get the same, yeah.
You get paid whether we here or not.
And no, if you're not here, we probably don't get paid. if no students, there's no need for us, yeah.
But you still got a class.
Yeah. If I'm saying, you know, if no students, if a teacher has no students,
Enrolled. I mean, if you got a bunch of kids enrolled, if they don't just don't show up to class, then I mean, you still technically got 20 students.
if they pay, if they're current,
If they're enrolled in the class that just don't show up to class, you still get. That's what I mean.
Yes.
You get paid whether
Mhm.
they're here or not.
yeah. But anyway, but for your tuition, for example,
It depends.
up to 18 is the same price. Up to 18 hours is the same price. After 18, you will have to pay for it.
Out of pocket.
From your
But
pocket,
that's
yeah.
just how much financial aid we go.
So, but per course, if we have variable cost, your tuition per course is variable cost.
It's per
But
credit.
your fees are fixed cost probably.
The student fee and that
Yeah.
900.
Is a fixed cost. Okay.
Try to have 120 per hour.
All right. In a retail organization like Walmart, for example, or for a grocery store like yours, variable costs include the cost of groceries sold, while fixed costs include the cost of building rental, depreciation on equipment, and the manager's salary. Those are fixed costs. Okay. In manufacturing organizations, variable costs include direct material, direct labor, indirect material, indirect labor. And your fixed costs include the cost of supervisor's salary, depreciation on building. All right. I'm returning those because I want you guys to redo them because the majority of them are wrong here. I already gave you grade. I'm not telling you what I gave you, but I want you to redo it. Spend a little bit more effort on them.
Yeah.
Brother Legbear, you didn't give me
Yeah,
yours.
it's right here, man. I told you I was gonna turn it in Monday.
Okay. Yeah, you return it with them. So
Okay.
I already gave you guys a grade.
Okay.
But I'm not telling you what I got on my records. I didn't put it on Jake's yet, yeah.
Oh, okay.
Until you redo it, yeah.
Oh.
Okay?
Well,
All right, let's move along. Cost also can be classified as, so far we talked about cost for financial reporting and we talked about cost measurement, if you remember. Okay, and now cost also can be classified as, and also we talked about cost behavior. When we say cost behavior, we said it could be variable or fixed, but there is a third one. We're going to learn that later. It's called mixed cost. That has characteristics of both variable and fixed. Okay. Now, in terms of value-adding costs, there is a value-adding cost and non-value-adding costs. Value-adding and non-value-adding. What's the difference between the two? Value-adding is the cost of an activity that increases the market value of products or service. Non-value-adding is the cost of an activity that adds cost to a product or service but does not increase its market value. I mean, if I were you, if I want to differentiate between value-adding and non-value-adding, the costs that are essential component of the product are value-adding. The essential components of product. For example, these bikes. Okay, what are the value-adding elements in it? The bike. All right. What are the value-adding of the bike?
yeah, put the rims on.
The essential component of the bike. The wheels. What do you call the gadol?
The handlebars.
Yeah. What do you, in Hebrew? In Hebrew it's called gadol. What do you call it?
The handlebars.
Handlebar?
Yeah.
Okay, what do you call this one?
The chain.
The bike.
Chain, and the seat. Okay, these are value-adding items. All of these are value-adding, and maybe the paint. Okay, but non-value-adding would be if you put a cushion on the seat, or you put too many accessories on it.
What about if you put a water bottle on the back tire to make it seem like you on like a motorcycle or something?
Yeah, that's a non-value-adding thing. Most of the accessories, the unnecessary things that look cool and that stuff, those are extra things. Those are non-value-adding. But it's okay to enhance. If you enhance the bar handles and the wheels and all that, increase its market value, that's fine. But when you start putting extra things on it, those are the non-value adding items. Yeah. So for you as a manager, you want to increase the value adding items and reduce the non-value adding things. Okay. So managers examine the value adding attributes of their company's operating activities and whenever possible reduce or eliminate activities that do not directly add value to the product. So you're going to look at those value adding things. There is not necessarily to put a very fancy cushion here or two mirrors, one from the right side, one from the left side, and then those extra things that make it look good. And so, yeah, I don't know if you will be able to get the worth of the money that you put there. Yeah. You may add money more than what you can sell it for. Yeah.
I'm telling you that water bottle.
Unless it's a Pee Wee Herman bike.
Dr. Seuss bike.
Mm-hmm. Them boys.
I'm telling you, add that water bottle to the gym.
Is that water bottle important
Yeah.
in the back?
Yeah, when you add it to the back tire, because the back tire is going to run over, it's going to make it sound like it has like a motor on it, like a regular bicycle. I used to do
Oh
that.
no, there is one thing, guys.
No, you think you talking
I
about
remember, you know, I had a bike myself. There is one item here, dynamo. You know what a dynamo is? That you put it on the side of the wheel and
make it turn.
make it turn, and then you have light.
Talking about spinners?
Yeah.
I leave rolling.
And when I first came to the USA in California, I bought a bike, and I used to go to school on that bike.
With the spinners on?
And but one time I almost made an accident. I mean, this guy had a brake. I mean, it's probably from that corner to that corner, a brake. Woo, you know. I crossed the street. I was brand new here in the USA, and
You didn't want no smoke?
and then I learned how to use the bus. Yeah, boy, that guy yelled at me. Really, I still remember in Fresno, California.
Fresno?
Yeah.
That's what's up. Hell.
Have you ever been in
Yeah,
Fresno?
I've been in Fresno.
Really?
Yeah.
Where? In which area? Do you remember Angus Street?
Nah. I was out there for like a week.
Do you remember the?
You know Reedy, California? Reedy?
Mm-mm.
Oh, okay.
We went to University of California at Fresno.
Oh, okay.
I mean, we learned just English there. Then I stayed there for about 3-4 months. Then I came to Texas. Yeah.
Fresno kind of hood though.
Huh?
Fresno is hood.
Yeah, it's good. Yeah. Compared to Huntsville, we went to Sam Houston State University, and then I went to Mississippi. I stayed in Mississippi.
He been everywhere.
In Oxford,
Are you with the Ole Miss?
Ole Miss, yeah. And there well, I shouldn't say that on here online. I met my ex-wife from Water Valley. Anyway, like we said, you want to reduce the non-value adding items, and you want to increase the value adding items. Yeah. Okay, manufacturing cost flow. Now, let me give you this scenario for a second. Okay, I can't draw on the words, that's why I'll just use the board here. Okay, for making bikes, for example, you're going to buy the parts first, correct? The components. All right, you're going to buy the components, so that's your raw material place, raw material. All right? And then you take the pieces from here, you put them in the floor, correct? To make them, to put them together. That's work in process. So you take them, you buy the components, you put them in this inventory, then you move them to the floor, put it together, and then you store it as finished goods, and then you sell it. Okay, so you have 1, 2, 3 inventories. You have raw material inventory, you have work in process inventory, and you have finished goods inventory. Each one of them has beginning and ending inventory. Beginning and ending, beginning and ending, beginning and ending inventory. All right? So when you look at that here, that's the manufacturing cost flow. That's how it works. You buy it, you put it in this storage, then you move it to the floor, and then to finished goods. All right? All right, that's those three inventories I'm telling you about. Yeah, but what's the difference between manufacturing, cost flow, and retailing, for example?
Retailing
Uh-huh.
cost flow, I mean, you're not making it, you're already like selling the product, like retail.
Yeah,
you're
retail,
selling-
they are,
manufacturing,
they
you're
finish
making the
goods.
product. Yeah.
They have only this inventory,
Yeah.
one inventory, finished goods. They buy it, they mark it up, and they sell it. Yeah, but manufacturing has three inventories. Yeah, okay.
Wouldn't that be the cheaper route to go anyway? Like manufacturing company, like if you make your own,
Manufacturing get your money.
yeah, if you make your own product instead of being just a retail company, we have to buy the product from somebody else.
Anybody familiar with Oxford, Mississippi? Is there a place they manufacture TVs? Emerson? That's where I bought my first TV in Mississippi. I bought a TV, they manufactured it.
So you bought your first everything.
I remember that. I still remember that.
Yeah, that's funny.
So now you got your first everything all over the world, huh? Damn, dog.
Well, I've been in a few places. I've been in Egypt, but it's around Cairo only. I've been in Syria. I've been in Yugoslavia. It's the old Yugoslavia, not the now is divided. Yeah, before it became. I went to study as a dentist, but I stayed 2 weeks there and fled. 2 weeks and came back to Jordan, and then from Jordan straight here to the United States. Okay, now guys, in what goes on in work in process?
Total manufacturing cost.
The labor cost, right?
What else? What does it take to put the product together?
The pieces, like the pieces.
You need material,
Material.
You need labor,
you need labor, and you need
supervision.
overhead. Yeah, but that falls under labor. Supervision.
Oh,
Now,
yeah.
supervision can be both, can be fixed and can be variable cost. Because I mean, it can be overhead, which is indirect labor. Especially if you are the manager, that will be overhead. But if you are the ones who supervise online, that will be variable. Okay, if you are the supervisor online, that's variable. Okay. So it takes all the manufacturing products, the three costs, direct labor, direct material, and overhead, that go into work in process. If I were to do a journal entry, work in process is an asset. All of these three are also an asset. So I would debit work in process and credit these. If I take material out of here, out of the raw material, and I put it into work in process, then I debit work in process and I credit this inventory. Okay, it's an asset, that's an asset also. Alright, when I buy stuff and put it in here, I'm going to debit this inventory, raw materials. And what do I credit? You're buying,
You gotta run it back for me.
you're buying raw material. What do you credit?
Buying raw material, you credit
Either cash or
cash
or accounts payable.
Oh,
If
it's
you
out
buy it
with
on
the
credit,
account.
yeah.
That's
Accounts
from
payable went
county
over
one. That's been some
Uh-huh.
time ago. I remember that's from county one. I remember that.
Yeah,
So-
that's an asset. When it's increased, it's debited. Both of them asset. The cash is an asset, and the raw material is also an asset. So the raw material will increase, you debit it. The cash is credited, or you increase your liability. you credit accounts payable if you buy the material on credit. Okay. How about what happens when you sell it?
When you sell it,
Uh-huh.
right?
What do we debit?
Oh,
Either cash
Cash.
or
accounts receivable.
accounts receivable. Yes, sir. And you credit
Cost of goods, materials. No.
sales revenue.
What?
You said it yourself, revenue or sales, yeah.
Oh, okay.
But you're right, you credit this inventory too.
Okay.
Yeah. I mean, the inventory went down.
There you go.
Yeah. So you debit cost of goods sold and credit inventory, if you put it that way, yeah.
Okay.
Yeah, but the sale itself, okay, so there are two things going. There is the material itself is going, and then there is the sales at the same time. Yeah. The sales are going to be credited because you have more sales, or it could say sales revenue. Yeah. Okay. All right. This cost of goods manufactured, we're going to take our time on doing it. So when I'm going to give you the balance of time, in the next 40 minutes, you got to
Redo the.
go over this, and I need chapter 14, guys. Redo this, and I need chapter 14. Okay?
Yes,
Redo. By the way, because the way it was done, nobody got a 9 or 10. Yeah, on this assignment, out of 10. Nobody got 9
So
or
what's the
10.
point of highest grade?
Okay, the highest is 8. I gave. But once you redo it, it will move to the top. Alright?
To 9 or 10.
Yes, it will move to 9. That's why I didn't put it. I have it on my records, but I didn't put it on jigs. The official one, the one I put on jigs.
About jigs, can you reopen chapter 14 so I can
I
extract
opened
it?
all of them today.
Oh,
yeah,
I
okay.
see. Oh, see,
Yeah,
I
need to
forgot.
turn
I
it in.
forgot to turn
Yeah, I
it
need
in.
to turn it in.
If guys need to go in and submit it.
Yeah, I need those.
Just submit the assignment.
Yes,
Alright?
sir.
Do 13 and 14. Submit. So I'm going to collect from you 14 today.
All right.
So you got to stay here and
And when is the project due again?
Thursday.
this week. We have to do it this week. Between now and Thursday, prepare your presentation. Yes, sir.
I got a logical excuse why I ain't gonna be here on Thursday.
Huh?
I got a logical excuse why I ain't gonna be here.
Who?
I ain't gonna be here.
Then prepare. Guys, you already know what the template is. Just fill it up with information.
We got all the information anyway, so all we gotta do is put it together and make a.
Just fill it up with information.
We
Yeah.
got all the
We
information.
did everything in class.
You already got it part done. You gotta come stiff.
You gotta put the icing on the cake.
Make sure guys, make sure you look spiffy when you come in.
Put that on. Then put on the work clothes.
Make sure you look spiffy. All right, so I'm going to stop now, and then the balance of the time is going to be, you got redo this very fast and work on 14. Okay. Now we are behind now, guys. Remember, we finished 13, 14, 15, and 16 now. It's done. So all those are due. And I also, guys, while you're doing that, let me go make copies for you for exam 1, 2.
Oh, okay.
Let me go make copies and I'll bring it to you. So let me stop the, I think I gave you all the assignments, correct?
I guess so.
Let me stop.